should start. Hello, everyone. Thank you all for joining us today. Before we start, I'd like to introduce myself. My name is Cherry Mendoza, and I'm from the Dubai Future Foundation. I'm part of the Area 2071 team. So for those of you who's attending the session for the first time or who haven't seen or haven't heard about the space, just to give you a brief about Area 2071. So it's an initiative by the Dubai Future Foundation. And one second, let me just by the Dubai Future Foundation, and our vision in the Dubai Future Foundation is inspired by His Highness Sheikh Mohammed bin Rashid Al Maktoum's quote, which is, "The future belongs to those who can imagine it, design it, and execute it." So if you can see, this is the space. So it's a space located in Emirates Towers, and also an ecosystem which is purposely designed to deeply connect great minds, talents, and the government, the startups, the corporations, and other ecosystem players, such as the investors, the academia, the youth, and the public, to co-create the future. And part of what we do in Area 2071 is host different programs like the Dubai Future Foundations, where we have the government entities set challenges and invite startups and scale up to solve for these challenges. And we also have different private sector companies like the AI Venture Lab Microsoft Accelerators, the Techstars Accelerators, and also we have upcoming programs like the Aviation X Lab and the PNG Challenges. And aside from these programs, we also host activations and events similar to this one that we're gonna do, which tackles different topics in different industries. And the purpose of this is to really create a vibrant community in Area 2071 and encourage collaboration, bring connections and connectivity and network to the community. And today's topic is around future of money. And without further ado, I'd like to introduce you to my colleague, Aruba Khalid from the Dubai Future Research. I give the mic to you. Enjoy the session.
So, hello everyone, thank you for joining us. Dubai Future Research is the research arm of Dubai Future Foundation. One of the things we do in Dubai Future Research is we keep an eye on emerging or ongoing technological shifts, which we think will have an important impact on our economic or even social landscape. One of the shifts we've been looking at for the past couple of months, and actually the past year or so, is the emergence of digital currencies, and in particular central bank digital currencies, and what they really mean for our broader financial and economic landscape. So if you're relatively new to the discussion on digital banks, central bank digital currencies, or crypto assets or blockchain, that's okay, because our expert panel is going to break everything down for us and make it really clear and easy to understand. But if you're yourself an expert in the area and you want to kind of get down to the nitty-gritty granularities of the topic, that's cool too, because hopefully we'll get some time to talk about those more in-depth issues as well. So for the former group, I want to start off with a really basic general question for our panelists. Maybe we can start with you, Ben. Can you just give us like a general understanding of what are digital fiat currencies or central bank digital currencies?
Yeah, of course. So central banks currently issue money in a few different forms that propagates throughout the financial system and of course in the economy. And generally speaking, the main ways they do that is through reserve holdings that banks have at the central bank, and then cash. And so the way people use money, though, is generally speaking either in cash or in card payments or in checks or other forms of electronic money payment. And so what a central bank digital currency is essentially saying is, instead of folks holding an account either at a bank or with an electronic money provider on a phone wallet or holding cash, instead of doing that, they can either hold money directly at the central bank or through an intermediary hold that money as something that is accepted in and of itself as a form of money, if you will. So there are a lot of different ways. I don't want to be too specific about what it means to be to be a central bank digital currency, because there really are a lot of different ways a central bank can decide this is what we're going to offer as a digital currency. But at its heart, that's essentially what it's saying, is that an individual can hold an electronic claim that is considered equal to cash money, either directly at the central bank or elsewhere. And by individual, I don't necessarily mean a person. It could also just be, we can say that banks are able to hold a direct digital claim on the central bank. I'm sure others have additions to that definition.
So opening up to the rest of the panelists, how exactly are central bank digital currencies different to general virtual currencies or cryptocurrencies?
All right, I guess I can take that one. First of all, there's a very, very, very big difference between central bank digital currencies and cryptocurrencies. Central bank digital currencies are essentially legal tender that is issued by a central bank, just the same way. It's just a different way of issuing your traditional dirhams or dollars or Saudi riyals. Probably if you go back to 40 years ago, a lot of the monetary base was in the form of paper or coins. Now, most of it is numbers on a screen. But the way that those are recorded on a screen are historically have been through a centralized database. Central bank digital currency essentially uses the power of blockchain and cryptocurrencies, except it's denominated in fiat, which means it's stable, it's insured by the government, it's used to pay your taxes, etc. And then cryptocurrencies, I guess, is a very vast topic, and there's also different types to that. There's utility tokens, something similar, for example, to Ethereum. Then you obviously have the most famous cryptocurrency, which is Bitcoin, which is, I think, very similar to digital gold. Yeah, I guess the rest of the panelists can shed more light on that.
So from what I understand myself, central bank digital currencies would be owned particularly, as you said, would be legal tender for a national currency like the dirham, like the dollar. So if we already know that private sector companies are also looking at establishing digital currencies, what is the kind of motivation for central banks to develop them too, if we're already seeing private sector companies do this? If I can open this up to the other panelists, Peter, Jan.
Yeah, maybe I'll start there. So thinking about the use of money, thinking about the nature of money, and thinking about alternatives to money as it currently exists, it's something central banks do. It's something central bank research functions spend a lot of time and intellectual energy thinking about. So the development of virtual or digital or cryptocurrencies, whichever term we want to use, is something that it fits very naturally with what central banks are already doing and have already done for many years in terms of thinking about these quite profound questions about money and about its uses and about the forms which it can take. So it's a natural extension of things they've been doing for many years. The specifics as to why central banks are starting to look at this area, or indeed have been looking at this area for a while now, is, I think, to do with two things. One, which I suspect Jan might want to comment on, is the push from the private sector and the private sector activity that you've already referred to in your introductory remarks to this section. The fact that there is an awful lot of private sector activity going on, and central banks need to be conscious of that, conscious of the potential implications of that, even if such currencies like Bitcoin are not legal tender in any country or in any jurisdiction. They still need to respond to that and find ways of working with these new innovations so that the monetary system as a whole can continue to function and in an effective manner. And then the second reason why I think central banks are devoting attention to this is that they see it potentially as a way that can address some of the issues that they face and some of the problems that they face within the existing monetary system, and particularly in the particularly unusual by historical standards circumstances that we find ourselves in at the moment, with very low or negative interest rates in many jurisdictions. Thanks.
What are some of those difficulties or challenges?
Some of the puzzles. Well, I think there are central banks as sort of guardians of economies in many countries are always looking for better and more efficient ways of doing things, as you would expect. Many of them have in their mandates things around the sort of growth of the economy as well as inflation targeting. But I think the short answer is several central banks believe they could better deliver on the mandates that they've been given by governments, including in respect to inflation, through the use of digital currencies rather than through the use of the existing, as Tal said, largely digital, but also paper and metal monetary system.
So maybe I could slightly expand on what's been said. If you treat blockchain and cryptocurrencies, or what they're doing right now, as a new frontier for technology, then and if you say that it's something like the internet, having a central bank think about issuing its currency on a blockchain, for example, would be similar to having a government agency think about setting up their website on the internet when the internet was new. The private sector and academia was playing on the internet in the 80s and so on, and nobody really, no government institution had a publicly facing, conscious, well, for the mass market at least, had a website. They started needing a website or establishing websites when they saw the benefits. And what are the benefits? The benefits can be, one of the benefits is that this is a new form of distribution of assets. So if you take a central bank, normally a central bank has two ways of issuing a currency. First way is as cash, the paper that we know as cash. And that's fine. These are hard to forge and we need to physically carry them around. The other way is that they issue them as loans to banks. And then the banks distribute this electronic money to us through bank accounts. And then it goes through payment systems and so on. The crypto world gave us a new way to distribute assets and currencies and asset. And the best, most concise term that you could use to say what that way is that these are digital bearer assets, meaning that if I am the owner of this this asset, this digital asset, I and only I decide where it goes or what to do with it, to transfer it to someone else. And that's something that hasn't been available before. It was always that I could do that with cash, I could give anybody cash, but if I wanted to give someone electronic currency, I would need a bank account and I would need to tell the bank to do it. With cryptocurrencies, I gain the autonomy to do it myself without an intermediary, and that was the bank. So now if the central bank issues these currency in such a technology, then they enter that space, and both individuals and companies gain the ability to manage the currency using this new technology.
And I think just to add in from, I guess, a government perspective, since I work with Aruba at the Future Foundation, the way that we've been approaching this is we've been looking at why different governments would actually look into this. And I think it's for many different reasons, primarily focused on policy objectives. So some of the countries that we've been speaking to, we've seen that the reason that they're looking into this is for financial inclusion, because they have a large unbanked population and they see this as a form of greater access to financials. And then in terms of, for example, a country like ourselves, I think we're looking at efficiency, and we're looking at distributed ledger technology in terms of efficiency and being able to really bolster kind of the fintech sector and what that will mean for the economy here. But I think it's primarily, again, from a government perspective, very focused on monetary policy, and I think both Diana and Peter also touched upon this. A lot of it is about trying to enhance monetary policy or change it, make it more innovative, and I think that's kind of where, at least from a public sector perspective, the focus is. But again, I think that's echoing a lot of what the other panelists said as well.
And just to jump on that point, I think it's a combination of monetary policy and potentially conducting monetary policy more in line with what the central bank wants, but also payments policy. And like, we always forget that like a big part of what the central bank does in a lot of countries is facilitate payments. And so oftentimes that means like directly running the payment system in a country. Sometimes it means just overseeing it. Sometimes it means both overseeing and participating in it. And so I think for a lot of central banks, when they think about like both this inclusion angle and the efficiency angle, see like how do we make the payment system run better, and see central bank digital currencies as maybe one way of doing that. I think there are some countries that are, already have a really efficient payment system, right? Like they might have like an RTGS system where individuals can send money immediately to other individuals, and that might make them rethink whether it's really necessary from their perspective to have a CBDC. There are some countries that are like currently figuring out how do we speed up our payment system. I think the US is a good example of that. But this question of like, this currency would not only replace the monetary, or central bank digital currency would not only replace the way the monetary base works now in terms of monetary policy, but also in terms of how does the payment system even work in our country? And that's like a very big question for central banks, and like operationally, that leads to some of the complexity. But
yeah, I think it's right. I think it's one of the things that's worth thinking about here is that although there's a huge amount of activity going on in this area, as Ben's just said, upending a monetary system and deciding to replace it with something else is not a small decision. Central banks are inherently relatively conservative institutions. So I think we're not necessarily going to see a rush of people in the second half of 2020 looking to get rid of all their notes and coins and looking to replace them entirely with a central bank digital currency. But nonetheless, despite that conservatism and despite the magnitude of some of the public policy questions that do arise here, this is an area of fertile ground in the sense of the potential advantages that could arise, some of which Jan's mentioned, and I'm sure we'll get to more of that later in the discussion.
Yeah, so that's a really good point, because earlier, I think, as we previously discussed as well, in March, when the government was discussing how a stimulus package can be delivered straight to people, one of the proposals on the table was potentially having digital dollars, which would be credited to Fed accounts, which would be like a bank account for every citizen just based on their social security number. But like you rightly said, the technological lift of kind of implementing that kind or creating that kind of infrastructure would be such a huge lift. Maybe it's still a few years away. What do you think are some of the potential challenges in addition to the huge technological lift, aside from that you think is holding some central banks back from going all gung-ho?
I'll offer an opinion, but I'm sure others have themselves. I think the key for central banks at the moment is firstly exploring what is possible, and then the second step is working out what actually is needed within that country. Because as was said earlier, it's likely to be very, very different. As Mariam said, you know, the needs in unbanked countries are significantly different to the needs in a very well banked and country and a country with a very well developed financial system. So I think there's a range of choices that would need to be made around would a central bank issue the currency itself? Would it get somebody else to issue the currency and just sort of itself control the supply in terms of setting limits? Who could have a central bank account if central bank account if it was directly with the central bank? What purpose the central bank digital currency would be used for? Would it just be for some form of wholesale real-time gross settlement replacement, or would it be something else? Or would it be to deliver helicopter money the next time there's a crisis? These are all very open questions, and I think, as I say, that's why it's fertile ground and fascinating ground, because the choices that different countries make will, I suspect, be very, very different.
I think to Aruba's, I fully agree with Peter, by the way, and to Aruba's earlier point, no central bank is gonna go gung-ho after this. Like, there's just one example of much simpler technology going wrong. I don't know if you recall, but in the Iowa elections, they had a mobile application to vote, and the application crashed that day. And this is to vote for the presidential election, which is important. But I'm pretty sure if you ask anyone in the world, what's more important, the election or your money, realistically, the answer is going to be access to their money. So imagine you roll that out and something happens. Like, all right, I work in blockchain technology, and I know that the technology is very promising. And that's why the private sector will be the first to experiment. When it comes to governments and central banks, they literally have zero room for error, because like if a private company goes bankrupt, or if trust is lost in a private company, CEO could get fired, shareholders are going to get upset, etc. But if trust is lost in a government, then you have all sorts of problems that the efficiency of a central bank digital currency aren't really worth it. So it'll be a gradual process.
I think that's a really good point, Talal, because there's that argument that if you lost trust in your currency or in a central bank or in a government, there could be a huge fallout. But that actually begs the question that a lot of people would argue the monetary system is already broken. And in a lot of countries, people don't have trust in their national currency. Like in cases that we see huge exchange rate fluctuations, just like one day, an exchange rate change can kind of wipe out your profit margin, put you out of business. So in a lot of cases, people would say the existing system's already broken and we need a technological solution to those kind of cases, like when you have a currency crisis and things like that.
Just a quick point, and I'll pass it over to the rest of my colleagues. But basically, the central bank digital currency doesn't solve that, or makes it worse. For example, we're living in a region that has a pegged currency. Throughout history, a pegged currency has never held. So this is like Forex issues or any of that isn't really related to the central bank digital currency. It's just a more efficient way of implementing your existing process.
It's a really good question. Why are the central banks, or when the central banks will go into this? From what Talal said, and I agree, I think they're going to be very conservative in going into this space. But on the other hand, it may not be necessary for them to get into the space directly, because central bank currencies are being digitized as crypto assets on the blockchains, on the public blockchains already. There are several versions of the American dollar already available that people trade, and there's the first one has been available for at least 5 years, and there are now, I don't know, probably 5 or 6, if not more, that you can use, and several of them are issued. Well, the cryptographic issuance is done by regulated entities. So Coinbase, for example, which is the biggest crypto exchange in the US, they issue one. And what they basically do is they take dollars in a bank account in an actual bank, and against each dollar that they have in deposit, they will issue a token. And these tokens work in any crypto wallet that you download off the internet, Ethereum wallet, as an ERC20 token. So this is already happening, and it even if the central banks don't directly engage in this and issue the cryptocurrency as a token, that doesn't mean it won't happen sooner. And it's already happening with dollars.
Yeah, no, I totally take that point. And if the existing monetary system, some may argue, not me, but some may argue broken and there needs to be a more efficient system. And central bank digital currencies are not necessarily replacing that. They would just be an extension of like a technological system of what we already have. Maybe the sequence would be the private sector has recognized that maybe the existing monetary system, they need a different one to kind of iron out these inefficiencies or kind of prevent their exposure to some risks that they already face now. And then it's the private sector leading the development in this space or pushing the technological innovation in this space, and central banks are just kind of trying to keep up. Like,
I mean,
yeah.
Sorry, go ahead, Peter. No, I was just going to say, thinking specifically about like some ways in which you would use digital currencies, particularly on the wholesale side. You know, one of the big
sorry, Ben, can I just ask you, sorry, can you just tell us like what exactly do you mean by wholesale, just for people who
sure.
you with the terms?
Yeah, so thinking about how institutions like banks or capital markets participants or other large financial institutions would use these rather than individuals on the retail side. Just thinking about, for example, using blockchain or distributed ledger technology in order to enable better functioning of financial markets. So you have like immediate settlement of trades in stocks or bonds, for example, on blockchain. In order to do that, you need to also have some sort of currency so that you can swap the currency for the stock or bond immediately, and you can do that all on the chain. A lot of people say we can't do that yet because we don't have a central bank digital currency in most, or really in any places. But going back to what Jan was saying, like we do have good substitutes that are denominated and backed by fiat currencies that are held on the chain. And so in some ways, you might be able to achieve that efficiency gain that you're trying to get in trading, for example, without necessarily going all the way to having the central bank being the issuer of the currency itself. And so I think there's a question, does that mean that the central bank is more likely to say this is somewhere we should be so that we can be the issuing entity and we can be the ultimate back end of the trading in the financial system? Or does the central bank say the private sector is supplying this efficiently and effectively and we don't need to get involved? So it doesn't really answer your question, but it's just like, you know, thinking about why, like how the central bank thinks about the existence of these other options out there. Sorry, Peter, I hope that didn't take things too far off course.
No, I think that's, I mean, what you've said, Ben, is absolutely right. I think that comes back to the design choices point, that and the particular question about which problem you're trying to solve as a central bank will very much determine whether you go down the route you've just described or at the other extreme, I guess, the sort of distributing helicopter money the next time there's a crisis of some sort to every citizen rather than mailing out $200 checks or whatever, you know. So I think that and this is where Ruben's point around, you know, there are countries where a relatively neutral observer would say that the monetary system doesn't work very well. And I think we only have to look around the world and see where, you know, an example, without naming names, where governments are accusing the stock exchange of speculating against the currency and things of this sort, which are, you know, there are clearly problems in some countries, and I think the question of whether private sector solutions will lead to the necessary improvements will very much depend on the government's views of what the necessary improvements are. Because if you're trying to maintain a peg and the market is telling you you can't maintain a peg, or the black market exchange rate for your currency is wildly different to what the official rate is, then you might not want a private sector solution that enables that to work more effectively, because you actually might want to stop that happening. But I think, you know, that's an example in sort of going in the opposite direction. But I think that the question of what roles different actors will play in this, again, will vary across countries and will vary depending on whether you're trying to fix an efficiency problem in transactions between investment banks and other banks, or whether you're trying to do something that is all about the whole payments system, which would be very different.
Could we see a potential future on the back of that, Peter and Jan and Talal, Ben and Mariam, where we see a sort of fragmentation in the payments or currency landscape, where there are central bank digital currencies, but then there are also private sector digital currencies, and there are different types of payment mechanisms within the same ecosystem?
Well, I think from what Jan said, we already have that.
Yeah, it's already happening. So I think we'd be trying to predict the future, and we can only say what's possible. We can't really say what's going to happen. If the central banks do not act in that area, but are permissive, as for example the Federal Reserve is for the dollar, you will get a pluralist market like is already emerging with the different dollar tokens that exist. Most of them backed by dollar cash, but some of them not backed by cash. And then there's competition between those, and probably just like with any internet market, you're going to get 2 or 3 at the top, and that's how it's going to end. And they may have different value propositions. Who knows? If a central bank enters that space and is good at it, that might cut the private attempts short, and just because for all the private enterprises that are issuing these dollar tokens, they have friction. They need to have a bank account. They need to have audits happening. They need to. They don't necessarily have as much trust from the public in terms of whether these tokens are going to be worth $1 in a few months' time after we're done using them. And the central bank might increase the trust in such a token. So that would decrease the competition maybe on the private sector side. But on the other side, if a central bank becomes more actively involved, it may actually make the currency of that country more attractive relative to other currencies. It might increase demand for that currency because it's now more versatile. It's available in more mediums.
Yeah, I was just also thinking about both what Jan and Peter said, and I think what we've been trying to do as well internally is really look at tokenization and digital assets. And funnily enough, even though I'm on this panel, not so much actually CBDCs, but more kind of the fractionalization of assets. But the reason for that is because and again, I come from government, so I might be quite boring, but I don't really see the idea of private sector kind of entities being able to issue currency as something that's going to be that feasible, particularly because of the things that Jan said in terms of risk and needing to have bank accounts. And we see that with companies already here who are working in emerging technology. It's very difficult to get bank accounts. So I think that there will need to be both public and private sector collaboration. I know that was very whiff of me, so, but I do believe in that. And I think one of the main reasons that we're looking at digital assets at the moment now is really to understand what the ecosystem is here and what needs to be done, both on an infrastructure level, so a technical infrastructure level, as well as a regulatory level, because I think the regulatory aspect of it will be necessary, and I think the central bank will definitely be necessary. Without it, I don't see it as feasible as it might be in other places, for example.
Yeah, I think one point to add is private sector are going to do it at the end of the day for the value of their shareholders, right? When for example, let's look at Libra. Libra is a great example of the most ambitious, it's not a central bank digital currency, but it was meant for payments. And it threatened, basically, because it involved a basket of currencies, some of it as dollars, some of it as euro, etc. The US government immediately shut it down. They sent them, senators sent them a letter, and then basically, even though it was supposed to be regulated outside the US and in Switzerland, that project was quickly shut down. And I think now they'll have to massage it in a different way and try to launch it. But basically, governments, as long as they control monetary supply, they're not going to let that go, because that is used for all sorts of purposes, whether economic, political. So I don't think that's something that governments will be willing to let go of. Yeah. But that's why, like, private sector, sorry, to your early point, Aruba, about will we see different types of payments? We already have different types of payments. Like, just think of the first time someone went to a store with a debit card and wanted to pay. It wasn't normal at the time, but now everyone uses it. So before that, you had traveler's check. Before that, you had only cash. And now, if I ask, like, what percentage of the UAE deal with cash, debit card, traveler's check, obviously no one uses it anymore, but people still actually use checks in Dubai to pay for their rent. Like, I had to get a checkbook in order to pay my rent because they wouldn't accept any other way. To your point, we will see many different types of payment methods because people don't always change at the same time, even if something is marginally more efficient.
Just one more comment. I think we left the safety discussion, and I saw one of the questions coming in is what about safety measures? Are these cryptocurrencies safer, etc.? I think that there's a very simple and straight answer: no. They're not safer in the general sense. They're more capable, but more capable, technology makes you more capable, but more capability goes both ways. You can make bigger mistakes and you can get more done. So there's no, one piece of advice, there's no such thing as a safer asset in that sense. It's just the technology.
So we're getting in a lot of questions in the chat that I'm sure you all can see. And since we only have around like 15 minutes left, I thought it would be good to get to some of them. So just opening this up to the rest of the panelists.
I saw there was a question asked about wouldn't central banks want to control things? My obvious answer to that is yes, because that is what they would see as part of their mandates as regards the money supply and the monetary system in a country. If you had a central bank digital currency, part of the reason for that may be a need for central bank and for governmental control. So I think that's what you would expect. To be honest, it's the fact that the central bank might want to control the overall operation and architecture of a digital currency of some sort doesn't mean, as we said earlier, that they have to do everything in that ecosystem. There may well be places for private sector actors to do various things, or indeed most of the things that are involved as regards digital currency. And again, it comes back to which choices a central bank or a country wants to make regarding which problems they're trying to solve. But I thought that was an interesting question.
Yeah, and just to add to that, I think what kind of control you're looking to have will probably differ country to country, right? It's both like what does the central bank and the government do, but also like what kinds of oversight will the central bank have over transactions or over accounts? What kind of privacy will individuals have? What kinds of control over the monetary supply will the central bank have? And these are, you know, all the kinds of questions that the central bank asks now. A lot of it is sort of like, you know, the money supply is a public-private kind of co-creation, but like the central bank is constantly thinking about what oversight, and the central bank and other regulators, I should say, what oversight they have over the transactions that take place in the financial system. It's just, you know, it's going to be different in every country. The amount of privacy that individuals have, it's different in every country, but like these are choices that the central bank will make.
I'll go for one answer. Oh, sorry, go ahead.
No, sorry, go ahead, yeah.
All right, there's one here. There was one answer, one question here, which I think is really good. Why would we be attracted to a centralized currency when the whole concept of blockchain is to decentralize the system? And that's really good because it gets a whole lot of concepts on top of each other, and you have to pick it apart and kind of go, what are we talking about? Blockchain shouldn't be thought of as a technology. It's more of a medium. It's like the internet. The internet, is that a technology? If I buy an internet router and I buy another one and I connect them with a cable and they talk to each other and I have computers hooked up, do I have the internet? No. When is the internet? The internet is when I connect to the world and I start talking with everybody here and, you know, accessing websites and talking to my parents and whatever else I want to do. That's the internet. So does the blockchain decentralize? Yes. What's the role of a digital currency on the blockchain? Well, it can exist on the blockchain. Just like Bitcoin exists on the blockchain or the other cryptocurrencies or other tokens. So you can have shares, anything that's an asset, shares, houses, cars can be tokenized. You can have a lot of things going on. So what does that medium allow? And here's one thing that I think is really good as an example. Imagine having a car and having your car registration being a token, basically a blockchain digital asset that you can give to somebody if you want. You could write a smart contract that has a loan, okay? And the smart contract could keep the ownership of your car locked until the loan is paid off. And if you don't pay it off, it would transfer the ownership of the car to the lender. You could make that completely automatic. So the digital currency here would be the payments, and that could be a central bank digital currency. The ownership of the car could be issued by the driving authority, the issuing authority in the country or in the city or wherever. And then the smart contract could be supplied by maybe the private sector. Blockchain is just the medium. It's just where it happens. I hope that makes it a little clearer.
Just one of the other questions, I think a couple of people have asked the question in a different way, is if you were to have a central bank digital currency, what would be the point of private banks? And that, of course, is one of the very difficult public policy design choices or questions that would need to be answered before going down the route of having a central bank digital currency that was available widely across the population in terms of people actually having accounts with a central bank. Obviously we can see that in some respects traditional banks are being disintermediated by innovation and technology even as we speak. But obviously if a central bank digital currency where you and I had an account at the central bank would be a whole different order of magnitude of disintermediation potentially. And that's one of the reasons why I think most of us on the panel probably don't see a very widespread run by the central bank with accounts at the central bank digital currency. I hope I'm not misrepresenting anybody's views there.
By the way, Peter, it's very interesting that you bring that up. I mentioned that as part of my work, we issued a stable coin, which is essentially a fiat-backed currency. And we managed to get into the sandbox of the Central Bank of Jordan to test out central bank digital currency. So we issued a small amount of digital Jordanian dinars, and we got participants to use a decentralized Ethereum wallet to send those tokens around, put them into different types of smart contracts. And I guess we had two outcomes of the project. First, that it poses a big risk if done on a mass scale by the central bank on retail banks. Retail banks would then become regulated and competed by the central bank. So central bank can't be the referee and the opponent. So that brings a big conflict of interest there. The second learning lesson out of it is the existing infrastructure for banking in the Middle East is not suited towards central bank digital currency. Like some of the banks in the UAE, Saudi, Jordan, any country really in the region, they're still working on systems or core banking systems that are probably older than I am. So maybe that's a bit of an exaggeration, but pretty old. But they're not really compatible. But that's a very interesting question, and I don't think the central banks would risk retail banks by having, like, I just don't think it's feasible for me to have an account with the like running account where I spend, etc., with the government or the central bank directly.
I'll offer another take on that question. What would banks do in this case? Because I said I can have a digital asset and I can autonomously transfer it to someone. Well, the question is, how do I keep this money safe? I mean, it requires some password or device or something that makes it possible for me to keep these tokens. And what if it's my life savings? Do I want it on a USB drive in my drawer? Is that safe? I don't see any way that banks won't be necessary. Of course they'll be necessary. They'll keep our money safe if we want that to happen. If we want to do our own money management, today we don't have as many tools. We sort of need to collect these bills and kind of put them under the mattress. We're able to do that with cryptocurrencies today, but that doesn't mean it's safe. Relating to the previous answer, is it safe? No. And the banks will help us with that. So there's room for that.
Yeah, and just to add to what everyone's already said, I think, you know, that idea of safety is one of these like core functions that a bank provides its customers. It's the idea of not just being able to make payments, but being able to store that money safely and access it in various different ways in different places in different times. Also, lending, I would say, is the other big thing that banks do on a social level. And like the central bank, I think, has, at least in most countries, the central bank operates under the idea that lending is how money is created. It's how, liquidity is accessed. It's how new businesses form, et cetera. So like central banks mostly have a commitment to ensure that the lending channel continues through banks. And so I think that's one, when the central bank is thinking about like what does it want to achieve if it is considering a central bank digital currency, ensuring that that doesn't interfere with lending is a big consideration. And I think then, a few people have mentioned this about, like would you hold the account at the central bank itself, or would it be at a bank or another institution? And if you were to have central bank digital currency, I think that leads to another question about, can banks lend in the central bank digital currencies? So is there a way for the commercial bank, the retail bank, to create central bank digital currency, which I think gets you back sort of to where we are today in the world, which is how the bank creates money essentially on a computer, and that goes into individuals' accounts in the form of lending. And then if you were to go back down that route, there's a question of whether you actually have a central bank digital currency in the way we think of a like stable coin, a cryptocurrency today. Hopefully I didn't just confuse things a lot. Sorry.
No, I think that was good, Ben. I was gonna say, I think that this is something that I saw there was a question for me as well, so I'm happy to answer that. But I think this is something that we need to test. So I'm now putting this out there. I think we need to put together a trial with everybody on this call, because I don't think we'll have an answer to a lot of these questions without testing it. And I think it needs to be done. So I'm just putting this out there. That's one thing. I've now put out a pitch to the rest of the world. And then the other question, I saw someone say, do you see private crypto being regulated in the UAE? I mean, it's a difficult question. I don't know if I'm the right person to answer it either, but I would say yes, maybe. But I do also think it's more likely we might have like a government crypto instead. But again, I'm probably not the right person to answer that. So it's probably a yes and a no. I don't know if Peter, if you know more things than I do. I know you have the digital custodian paper that you put out recently. So
yeah, so, I think, you know, across the landscape in the UAE, some aspects of private crypto are already regulated in certain areas and so on. I think we can expect to see more, but quite in what areas? I mean, for example, I would expect to see the Securities and Commodities Authority have already said that they'll be issuing regulations in the area of securities tokens. So not so much the cryptocurrency side of things, but certainly on those tokens that are equity-like or bond-like, if I can put it that way. We can expect to see something, and indeed, we at the DFSA will be publishing some material later this year. But yeah, I mean, I think it's inevitable with an area that has such potential to impact both at a macro level economic activity and at a micro level the lives of individuals. I think it's inevitable that there will be some form of regulation. Jan's referred to sort of some countries being more permissive than others, but I think that's during a stage when lots of things are being tested out, and people are trying to find, well, what is the right way forward for us as a country in relation to this. And you can see this experimentation in the US, you can see this experimentation in China, you can see it in a number of other places where the experimentation is being encouraged, including here in the UAE in one way or another. So you know, but I think eventually we'll get to a point where whichever of the 2 or 3 successful providers are left standing in an area, they may well end up being regulated because of the nature of the activities and their broad social impact.
Okay, since we only have a few minutes left, I want to open the floor to the panelists. Is there a question that you want to address that hasn't been asked in the Q&A, but it's an important point that we haven't touched on yet? And you've been waiting for someone to ask that question and it hasn't been asked. So as the experts, is there something you think we should have been taking into consideration that we haven't touched on yet? Okay.
I think one thing that often is raised with central bank digital currencies is the universal surveillance of what happens with the money. And while that technology makes that possible, that's not necessarily a feature that has to be there. If you look at the digital currencies that we have available right now, which are the bank account ones, the central bank doesn't know how much we have in our bank account. The bank knows, but the central bank doesn't have that information. Same with cash. The central bank issues the cash, it rolls out the door, and that's about as much data as they have as to where it went. That's if we take something like blockchain, it gives us the ability to have governments the ability to see where all that money is, but now that comes with responsibility and a headache. Do you really want to know? Do you really want to manage all that data? That's a lot of information. And the answer is that with the cryptocurrency blockchain technology that's out there, that's not really required. So central banks don't necessarily have to issue their currencies in such a way that it's that it's just one database and everybody sees every transaction. There are, on blockchains, you have what's called layer 1 technology and layer 2 technologies and so on. And these can abstract and take out a lot of information out of the public, out of that big database that's the blockchain, so that it's not visible who has what and how much. What it does still let you do is prove things. I have a certain amount of money I would like to use as collateral. I can prove I have that. A bank comes, or the tax authority comes in and says, Jan, how were you able to buy that car? Where did you get the money? I could prove how I got the money and where it came from. But that doesn't mean that this data has to be somewhere in some big data analytical solution for anybody to just, or any authorized people to just come in and take a look at. And on the one hand, well, maybe they want to have this kind of control, but on the other, if you make that a requirement that this central bank digital currency must be traceable, that may make it impossible to implement today because the technology is not really there. I mean, China's trying it. Maybe they'll succeed, maybe they won't. Should they succeed? Should they want to succeed? That's another question. Maybe a more minimalist approach from another central bank will prove to be the more efficient and the more practical approach.
So you mentioned China, sorry, yeah.
I think somebody just actually asked the question I was going to refer to, which is around the environmental impact of central bank digital currencies, or digital currencies more generally. I think we got asked a question in advance about when cash is abandoned, what will happen in terms of recycling all the paper, which isn't a question we can answer today. But the environmental impact is an interesting one. The question that's just been asked is about whether proof of work as a verification concept is sustainable, and I think the short answer is no. Jan, I'm sure will just, in terms of the layer 1, layer 2 discussion, we'll say that there are other ways to move forward in terms of verification of transactions on a blockchain. But I think if you look at the data around how much energy around the world is expended with Bitcoin, if you think about a much larger scale of usage, if the whole payment system in a large country, or indeed globally, was replaced with digital currencies, that there would have to be a better way or a different way of validating and verifying transactions, because certainly proof of work isn't sustainable.
Okay, so just as a closing question, since I think we've either just got very few minutes left or we're almost over time, just a final question that came in regarding China's trial of the digital yuan. If larger economies like China do successfully pilot, trial, and actually roll out digital yuans, would it kind of force the hand of smaller economies, which are kind of dependent trade partners of such bigger economic players, that almost we would just need 1 or 2 large economies to kind of push the trend, and then a smaller economy would just have to?
That's a really good question, Aruba. I think you have to kind of look at what we mentioned earlier about the existing dollars that are already there on the Ethereum blockchain, the several different choices you have: USDC, CUSD, DAI, USDT, TUSD. Those are all already dollar-denominated tokens, and in many countries, enterprises are free to use them for business, and they do. So the question may not be, will Chinese success or lack of success move things? I would rather ask the question, aren't things moving already? It's just that we don't see them because it's a little too early.
I mean, I think, we have a global monetary system where at the moment the dollar is largely the reserve currency. The Chinese authorities have made efforts for the renminbi to become either an alternative or a replacement reserve currency, and in terms of their trade policies and so on. And it's not impossible that the situation would be replicated in a digital currency world. I mean, obviously, as was said earlier, most of the transactions in the existing dollar and the existing yuan stroke renminbi are electronic anyway. So, you know, we're not, I mean, we are talking obviously in some cases about people walking around with suitcases full of money, but as a general rule, we're talking about digital transfers. So the idea of having a small number of dominant digital currencies, in some respects, from a trade perspective, is not really different to where we are today.
Okay, that's a really good point, actually, because my final closing question was going to be, but I don't think we have time for it now because we're just over time, actually. Taking my moderator's privilege to ask the question that's on my mind. Do you think that central bank digital currencies would have any, or the application and adoption of central bank digital currencies would have any impact on the current monetary system in which we have right now the dollar as a reserve currency, with it potentially being replaced or losing its significance?
That requires another hour of discussion, probably.
Yeah, I know, which is such a shame that we're over time already. So
I'll give like a very quick answer, because so nothing lasts forever, first of all, but at the moment, the US dollar is by far the world's most important currency. If you look at it in every metric, like no matter how you try to cut it, the dollar is by far the leading currency, and I don't think that will change in the near future. However, we have to remember that before the dollar was the pound, and before the pound it was the Dutch guilder, and before that, so it changes every 100, 150 years. And yeah, this is something that, with the amount of money that the US government is printing, there's a concept of currency debasement. And given the inequality in wealth in the United States, this is something that is a real risk in the coming, not in the near future, but in the medium to long term. Because we spend our days and weeks working so that we can get paid in dirham or dollar, which is a dollar denominated currency. And then you have the US government printing millions and trillions and billions of dollars, and which essentially makes your work less worthless, because your work is denominated in dollars, and that gets kind of dissolved there. But yeah, that's a very important and long topic.
We can spend another hour discussing inequality then.
I was just going to say, I know we're out of time, but and this is not a question, but more one of those kind of obnoxious mentions at the end. But I did want to just thank Aruba, because she actually wrote the report on the future of money, which is on the Dubai Future Foundation website. So as I said, this was an obnoxious shout out, but I think it is the reason that we had this panel today. And I see that Cherry very quickly just put in the link as well. So thanks, Aruba, for putting that together and for doing all the work on this as well.
Okay, great. So thank you, everybody, thank you to our excellent panelists. Maybe we need to have like another panel discussion soon to get to some of the questions that we weren't able to address in this session. But I'll leave that to the next time. So thank you everyone for joining us, and I hope this was helpful and interesting.
It was great. Thank you, Aruba. Thanks.
Thank you, Aruba. Thanks very much.
Thank you, Talal. Thank you, Jan. Thank you, Peter. Thank you, Ben.
Thanks for arranging it. It's been great.
And for the attendees, I just wanted to inform you that the session will be uploaded in YouTube, and follow us in Area 2071 social media channels for more sessions to come. And hopefully with you guys. This is an amazing session. Thank you, everyone.
Thank you for organizing.
Thank you.